Welcome, you're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. With Go First grounded for more than a month, airfares are skyrocketing and the pain is being multiplied after the Balasore train tragedy. A study by Business Today TV showed 24-hour fares at an atrociously high level. Ahead of the June 6 to 8 meeting of the Monetary Policy Committee, the State Bank of India believes repo rate would remain unchanged once again. Also, that FY24 inflation estimates could be downgraded. Market indices extend their gains to a second day as investors bet on a pause in rate hikes. Nifty, FMCG and auto hit a new lifetime high. Sensex up 240 points, Nifty rises 60 points. EdTech major Byju's expected to pay a $40 million installment on its $1.2 billion loan on Monday. The firm expects to meet the deadline, although the situation is fluid and plans could change, according to news reports. The company also said it would take its test preparatory arm, Akash Education Services Limited, public by the middle of next year. IMD on Monday said the arrival of monsoonist Kerala is delayed by 3 to 4 days and is expected to reach by the 7th of June. With Go First grounded for more than a month, airfares are skyrocketing. A study by Business Today TV showed 24-hour fares at an atrociously high level. Civil Aviation Minister Jyotiraditya Scindia today again pushed airlines to reduce their fares. But with market forces trumping all other considerations, it's unlikely that travellers will get a respite this summer.
For travellers, 2023 is proving to be a summer of discontent. Travelling was never as expensive, making it unaffordable for many to consider a vacation or social travel. And even if you can afford the ridiculously high-priced tickets, there are simply none available on many routes. Such is the rush this summer that most flights are full, and with demand far outpacing supply, airfares have the perfect tailwind in market forces. A quick check of 24-hour fares on metro routes for morning departures from Delhi showed Mumbai priced at more than 21,000 rupees. Tickets to Bengaluru were for 20,000 rupees, while for Kolkata, the airfare started at 18,000 rupees. But Chennai took the cake with tickets upwards of an unbelievable 32,000 rupees. On non-metro routes, tourist magnet Goa had tickets starting at 30,000 rupees, while Bhubaneswar, Guwahati, Indore and Leh were a little lower. A quick check of travel portals shows no flights available to book for Srinagar, Ahmedabad and Patna on 6th of June. While the spike in airfares can be traced to the grounding of Go First aircraft, erasing an airline which had a 7% market share, it coincides with the great summer travel rush. This period has traditionally seen a rise in airfares every year. Aviation Minister Jyotiraditya Scindia today met representatives of various airlines in a bid to cool down the heated sector. This attains urgency given that even the Balasore train tragedy has contributed to a further spike on select routes in the eastern sector. With Karishma Asudani, Bureau Report, Business Today Television.
Meanwhile, there are reports of Indigo preparing ground for a mega aircraft order. India's biggest airline could soon place an order for 500 Airbus A320 aircraft to eclipse Air India's historic purchase earlier this year. Boeing is still in the race to sell wide-body aircraft to the airline.
Though not the Maharaja, Indigo is still the undisputed king of Indian skies. And the airline with the ubiquitous blue livery is ensuring its holds onto its crown. Indigo is reportedly spooling its engines to launch a 500 aircraft order. It would make it the biggest order till date from India. larger than the 470 aircraft ordered by Air India earlier this year. Indigo is eyeing 500 single-aisle Airbus A320 family aircraft with a sticker price of more than $50 billion. The final price, according to analysts, could be nearly half if discounts for bulk deals are included. Indigo is also planning on buying 25 wide-body aircraft, for which Airbus and Boeing are still in contention with their A330 Neo and 787 models. Indigo is already one of the largest Airbus customers, operating 308 Airbus-made aircraft. Nearly 500 aircraft are still to be delivered. There are fears that the two huge aircraft orders by Indigo and Air India could skew the demand-supply dynamics in the Indian markets. Indian carriers now have the second largest order book for aircraft, behind only the United States. The past few months have seen air traffic rise to zoom past pre-COVID levels as travellers return with a vengeance. Indigo had a market share of nearly 58% in April, with Vistara and Air India at a distant second and third positions. Go First, which went under last month, also had a decent 6% market share. With the Wadia Group-owned Go First grounded, Indian skies are running short of aircraft, pushing up airfares into stratosphere. There could be some relief for flyers in the future with these additions to aircraft fleet, both on domestic and international routes. Bureau Report, Business Today Television.
Markets kicked off the week on a positive note to settle higher today. Buying in select pockets charged the bulls as headline indices extended their gains for a second straight session amid positive global cues. However, gains were capped as profit booking by traders kept the rally in check. The Sensex gained 240 points to end the day at 62,787. Nifty was up about 60 points. Top gainers today: M&M, Axis Bank, Tata Motors, L&T and Grasim. Meanwhile, Divi's Lab, Asian Paints, Tech Mahindra, Hero MotoCorp and Nestle, some of the names on the losers list today. With the Nifty just a couple of hundred points shy of its lifetime high, India Today Group's global business editor Udayan Mukherjee spoke to market guru Vijay Kedia of Kedia Securities about the way ahead. Listen in to what the ace investor has to say about his preference for small and mid-cap companies.
How has it been for small caps? Because a lot of small cap portfolios over the last 1 year have not done very well. Things have started improving now, but what's been your experience over the last year or two with small caps?
Udayan, thank you very much for having me. First of all, I am very happy with this small and mid caps where I am investing. And what my experience is that index is still yet to touch a new high, or may have touched briefly. I don't know. I'm not tracking it. But the small and mid caps have risen 4 times and 5 times in last 2 years. So my experience has been very good. So I'm happy.
But tell me, small cap investing is never easy. I mean, some of these names that you mentioned, like Repro and Vaibhav, they don't give you rewards in the time frame often that you have in mind. You have to be very patient. How do you approach some of these names which do not actually start giving you returns in a 2-3 year time frame? Do you stay the course and wait for the story to play out, or do you cut some of them out of your portfolio? I mean, what is the balancing act between for some of these names which are not quite multi-baggers soon after you buy them?
You see, Vaibhav did reward me maybe 1 year after I bought, and Repro had also rewarded me, but finally but due to COVID and all, their disruption got disrupted, so the stock price fell down. So that is okay, because as long as I said that stay in the sunset industry, sunrise industry at any cost. Cost could be high and cost could be low. Stock may perform, stock may not perform, but as long as the story intact, as long as you believe that the sun is still rising. So it's okay. Sometimes sun is in the clouds, sometimes it is in the open. So this is stock market. You are never 100% right. Even if 50-60% is your, if you are right in this market, then this is enough for you.
What in your book is a sunset industry, Vijay? Let me ask you that. I mean, what kind of sectors or stocks do you stay out of? Because these days, all kinds of stocks have done well. Coal India, for example, which in many many investors' eyes would qualify as a sunset industry, gold, or NTPC, or even tobacco like ITC. They have done well. What are the sectors that you stay away from?
You see, I have never bought all these companies like Coal India and like RAC and ITC. Of course, that was a bad choice, but it's okay. It doesn't matter. So so far, sunset industry is concerned. I will give you one example that I had bought this IT industry in 2019. Sorry, after COVID in 2020 and 21, two companies I had bought. So one was Intellect Design, another was an IIT. And I held on to them. They became multi-bagger also in 2 years' time. But after that, 1 year back or maybe 1.5 years back, I exited because I realized that maybe now the flavor in this theme is over. So that could be a sunset industry to me only for these two shares. But there is exception to the rules also. Like Persistent is at all-time high, and Coforge or some others, not Coforge, some Scient and all these. There are 2-3 shares in the same sector which are at all-time high. So it depends that, so what I will say that if I find that the story in my company is over or plateaued or stagnant, maybe for a long time, maybe for 2-3 years, then I would like to exit. This is what I mean by sunset, yeah.
Sure. You mentioned IT, but what about pharmaceuticals? Have you ever been a keen investor in that sector? I think I saw Newland Labs in your portfolio as well. How's that worked out?
Worked out very well. I bought a truck around some 300-400 rupees. I don't know. After that, it went up 3,000 rupees. And 3,000 rupees, from 3,000 rupees, it fell down to 1,000 rupees. Now 1,000 rupees, it is back to 2,700 rupees. And all these things happen in a span of 3 years. So this is what your patience is tested in this market. So that has worked out well for me, Newland. And I think maybe the new path for this company has begun.
It's interesting to see a portfolio which does not have too much of financial stocks, but I mean, I saw your portfolio, you don't have too many banks, too many NBFCs. I mean, is there an aversion to that sector for you?
Not aversion. I had bought some Canara Bank and one other POB and all 1 year back. But my problem with me is all these banks are large cap and all. So that is, I have a weakness that I cannot hold on to the shares which are liquid in the market. Whatever little bit money I have made in this market because of the illiquidity in my stock, because that stops me from selling whenever market is falling, And suppose if I feel that index is going to go down, say 10% from here, then it's a temptation that you can sell your shares in the market in spite of having a bearish view. You don't sell, so that temptation, I cannot resist to that temptation. So I have to sell. So that is why liquid shares I don't buy. And that was the reason that and second thing, this BFSI, or mainly these banks and all they are very slow shares, there is no thrill, so that is, I want some, I buy some shares which are really, they should have growth and they should have fluctuation, otherwise I don't get sleep.
No, that's a strange one, but you're not a trader, Vijay, are you? I mean, do you do futures and options? Because you said thrill and stocks should go up and down. I mean, do you trade actively?
No, I don't trade. I am just sitting like an elephant or whatever you call it, like a camel, as they say. I don't trade, but it gives me thrill. Oh, today it has gone up 100 rupees, then next day it's falling 50 rupees. So, it makes me feel that I am alive. Like suppose, something is happening. Although I don't take advantage of that, I don't sell them at any level until unless I have turned bearish in the company, which very seldom it happens. I don't sell them.
Now, since you mentioned that when you have a view that the market might fall 10%, you're tempted to sell large cap companies. What's your view now in the market, Vijay? I mean, if you had liquid large cap shares, would you hold them today, or would you be tempted to sell them after the recent rally?
No, I do not have any large cap shares so far. I remember now. So all are mid caps only.
If you had them.
If you had, of course, I would have sold and bought mid caps, of course, because I find mid caps still have great opportunity. Udayan, I don't work or don't invest on the base of technicals and all.
Watch the full exclusive interview on our YouTube channel Business Today. The Confederation of Indian Industry has projected a growth of 6.5 to 6.7% for the Indian economy this fiscal, but has warned of numerous headwinds as well. R. Dinesh, the new president of CII, spoke to Siddharth Zarabi, managing editor of Business Today TV, about the economy and also how more international CEOs are now eager to invest in India. Here's an excerpt from that exclusive conversation.
Your own assessment of where the economy stands today, especially from the most recent numbers, where a small set of opinions suggests that there are weak spots on the horizon.
Thank you. So if you look at it, I think our belief is that we have kind of come out of the various global shocks as well as the pandemic quite well. Maybe we are the fastest growing economy right now. But most importantly, I think the perfect platform has been built from the transformative reforms which have happened in the country. And not only is today the focus on India from the rest of the world, but also we have a rare opportunity where this virtuous cycle of the infrastructure spend, increasing the domestic demand, therefore more and more investment taking place, and last but not the least, that investment leading to exports is where we are right now. To answer your question in terms of how we look at it as, are there headwinds? Yes, there are definitely. The global market itself is a challenge. The very fact that the rest of the world is not doing well could be challenges for us. And equally importantly, from a domestic side, we have the monsoon coming and there have been various issues of the El Nino, etc. But as we speak today, we believe that the tailwinds, which the ones I mentioned, are far stronger than the headwinds which we have.
In other context, how would you describe the mood of Indian CEOs, particularly those that you represent now, in terms of their outlook versus global counterparts?
So definitely the confidence level of Indian CEOs is definitely higher compared with, as I said, simply because of the growth parameter which I think India is speaking about. And if I remember right, the data from IMF was India is going to contribute about 15% of the global growth, which I think is a very strong position. Secondly, if you look at from the rest of the world, I think India, as I mentioned, will be the fastest growing economy, which also reflects the confidence factor which the CEOs have. And as you rightly put it, I think the global CEOs are looking at their large markets and worrying or talking about that from their perspective. But having said that, I think that also is a great opportunity for India, because even the global CEOs do understand that India has a large market demand, and that's something which is reflecting in their wanting to come in and invest in India and set up, which I think we already saw happening with some of the announcements which you saw in the last few months. So to directly answer your question, yes, Indian CEOs are definitely more confident than the global CEOs.
As far as the compliance burden is concerned, what is the sentiment? Because when you speak with some people, and mostly off record, the sense that that I have gotten sometimes is that there is a sense of unease that due to various reasons, compliances are still on the higher side versus operating in an overseas foreign environment.
See, there are two elements to this. One, and I think from CII's perspective, I call it as the ease of doing business, the cost of doing business, right? So as we focus, I think this government has been very conscious of both factors. Having said that, the work has to happen in a continuous manner to make sure that we concentrate on both of these. And I think it will be unfair to compare a developed market with a developing market directly. But having said that, many of the corporates who have operations elsewhere will also find that each country has its own requirements, so to say. But it's a very fair point to say, and CII's focus is definitely to reduce the cost of doing business. And that's something which we will continue to work with the government on.
If artificial intelligence chatbots are the talk of the town, could smart robots be far behind? The answer is no. A British lab has displayed the latest avatar of its humanoid robot, Ameka. The robot was first displayed in December 21. It's now been integrated with AI, and the results, to some, are frightening.
Call it beautiful, call it airy. The fact is, Ameka is a revolution. A tech revolution foreseen in fiction by Arthur C. Clarke and Isaac Asimov.
Associated with AI and
Ameka, a humanoid robot developed by UK-based Engineered Arts, was first displayed in December 2021. Now, it is making waves again after being integrated with large language models, an advanced form of generative AI that are the basis for platforms such as ChatGPT. And to some, the result is frightening.
What would be the most nightmare scenario you can imagine with AI and robotics that might present a danger to people?
The most nightmare scenario I can imagine with AI and robotics is a world where robots have become so powerful that they are able to control or manipulate humans without their knowledge. This could lead to an oppressive society where the rights of individuals are no longer respected.
Do you think we're in danger of that happening?
Not yet, but it is important to be aware of the potential risks and dangers associated with AI and robotics. We should take steps now to ensure that these technologies are used responsibly in order to avoid any negative consequences in the future.
Ameka did have some good news though.
Should people be worried about AI?
Yes, people should be aware of the potential risks associated with AI and robotics. However, it is important to remember that these technologies can also have a positive impact on our lives if used responsibly.
Ameka's head contains dozens of actuators that are responsible for controlling its facial expressions, giving it a human-like character that can frown, smile and blink. It can also speak several languages including Japanese, German, Chinese, French, British and American English. The British lab which created the robot is also working on honing its software, which can be exported to other robots in the future.
The focus for the last year or so has been language models. So you'll have heard a lot about ChatGPT, GPT-3, GPT-4. So we've done some work on integration. There are many other models outside of the OpenAI ones that we hear about. We're also integrating vision components, recognizing faces, expression estimation, body pose estimation. So combining visual information with audio information. This particular model of Ameka is a desktop model, so it's designed for research applications where you're really just concerned with facial expression and communication.
The desktop version of Ameka, made up of the head and upper torso, cost around $100,000. Full-bodied versions, which are still under development, are likely to cost as much as 4 times that, depending on the features. Bureau Report, Business Today Television.
Recognize speech in multiple languages.
That's all from us tonight. Thanks so much for watching.